So in this section, we are going to look at management accounting. We have already discussed the levels of management. Now, even within management accounting, remember it comes with the word management. That is why we looked at the levels of management. So the purpose of management accounting is to provide relevant and reliable information so that managers can make well-informed decisions. So the value of management accounting depends on the quality of information that is provided and whether it helps managers to make better decisions. So in other words, the purpose of management accounting is to provide information for planning, control, and decision-making. Now, when you want to look at management accounting in detail, you could say that it is one, a branch of accounting. Okay, so branch of accounting. Two, and it uses both financial and non-financial information to help management in planning, controlling, and decision making. So we could say that these three techniques or these three things are the theme or the main things that management accountant need to do or management accounting covers: planning, control or controlling, and decision making. So we could see that management accounting is a branch of accounting. So there are two branches of accounting, namely financial accounting and management accounting. And you have to know the difference between the two. Okay, you also need to know what financial information is, which is information quantified in monetary terms or has money value attached to it, and non-financial information are information that do not involve monetary assignment or monetary attachments, okay, but they are very important. So this information can help management to plan, control, and take decisions. So we've seen that the main theme of management accounting is to use these three techniques to achieve organizational objectives. So the last one is to achieve. So assisting management to plan, control, and make decisions to achieve what? Organizational objectives. Okay, so this is how I want you to define management accounting: a branch of accounting that uses both financial and non-financial information to help management in planning, controlling, and decision-making to achieve organizational objectives. So we are going to look at them one after the other. Now, planning. What does planning involve? Now, planning involves setting objectives for an organization and making plans to achieve that objective. So when we say you are planning, you set an objective, you make plans to achieve those objectives. Now, the planning process is a formal process and the end result is a formal plan, authorized at an appropriate level in the management hierarchy. Now, formal plans include long-term business plans, budget and sales plans, weekly production schedules, capital expenditure plans, and so on. So information is needed in order to make sensible plans. For example, in order to prepare an annual budget, it is necessary to provide information about expected sales prices, sales quantities, and costs in the form of forecast or estimates. Okay, so mostly we plan with budget and forecast. Are you getting it? In the organization. And this is how you need to talk about planning, which involves the setting of objectives and showing how these objectives can be achieved. There are also levels of planning which still involves the three levels of management. We'll come and look at Anthony's hierarchy later and understand the levels of planning. Now, when we talk about controlling, which is a key theme of management accounting we discussed earlier, what does controlling mean? Now, control of the performance of an organization is an important management task, and controlling involves monitoring actual performance and comparing the same with the objective or plan. So I wanted to, for example, buy 5,000 units or 5,000 kgs of material at 10 cedis each. And also, meaning I plan to incur a cost of what? 5 or 50,000 Ghana cedis. But at the end of the day, I was able to buy the same 5,000 kgs of material at 9 cedis each, right? So this is where I monitor my actual performance and compare it with what I wanted to achieve. So this one ends up with 45,000. So the question here is, taking a control action when appropriate, comparing it with my objective. This was what I wanted to achieve. This is what I have achieved. What is the difference? Can I take any appropriate action? Yes. In this case, I have really achieved more than I wanted, because I wanted to spend 50,000. I ended up spending 45,000, meaning I've done very well. And controlling involves what? Evaluating my performance. So in this case, who buys in the organization? This could be the procurement manager. No, so we are going to say that, okay, so the procurement manager has done very well because he has been able to meet expectation. Okay, so when operations appear to be getting out of control, management should be alerted so that suitable measures can be taken to deal with the problem. Now, control information might be provided in the form of routine performance reports or as special warnings or alerts when something unusual has occurred. Okay, so monitoring actual performance and comparing it with what the original plan was is controlling, and taking control action when appropriate, and also evaluating actual performance. So controlling is also a major part of your exam, which comes with budgetary control, standard costing, and variance analysis. And also performance appraisal as well. So we continue. Now we've seen controlling, then what is decision making? Now, managers might need to make one-off decisions outside the formal planning and control systems. Management accounting information can be provided to help a manager decide on what to do in any situation where a decision is needed. So in simple terms, we could see that the same way we have 3 levels of management, we also have 3 levels of decision making, okay? So we have the strategic level, who makes decisions, which is like top level management. So we can have strategic decisions. The same way we can have what? Tactical decisions, and we can also have operational decisions, which are day-to-day decisions that are taken. Okay, decision to pay taxes, decision to pay suppliers, decision to maybe run a system. All these things are decisions. Now, one thing I want you to understand about decisions again is another classification of decisions, which is routine or frequent decisions and non-routine decisions. Okay. Now, one thing you should understand is that there are some decisions which may be routine in nature, which are day-to-day operations, and non-routine or ad hoc decisions which do not occur often, like maybe opening a new branch. It doesn't happen all the time, or maybe selling off or closing a particular division also, or maybe buying property, plant, and equipment. Doesn't happen all the time. So you need to know the different types of decisions or the different kind. You can also look at decision from a financial point, financial and non-financial decisions. You can look at decisions also from the common type, which we know, which is long-term decisions and short-term decisions. Just like we saw, strategic decisions are often long-term, and we also have medium-term decisions taken at the tactical level, the operational, which is short-term. So these people are short to medium-term. So in simple terms, decisions can be long-term or short-term. So in your exam, you will be doing what we call short-term and long-term decision-making. And short-term decision-making, you are going to look at things like shutdown decisions, looking at whether to shut down a product line, a division, or so on and so forth. And here we can use capital budgeting or investment appraisal to deal with long-term decision making. Okay, so please, decision making is a key part of your syllabus, and you shouldn't joke with it because it can be quite confusing sometimes. Okay, so we have seen the 3 aspects that are very important in management accounting, or what your whole syllabus actually covers. It is these 3 aspects. Then we have the levels of planning. So planning is a hierarchical activity linking strategic planning at the top with detailed operational planning at the bottom. Now, strategic plans set a framework and guidelines within which more detailed plans and shorter term planning decisions can be made. So we start with strategic planning. Now, strategic planning involves identifying the objectives of the entity and plans for achieving those objectives, mostly over the long term. Now, strategic plans include corporate strategic plans, business strategic plans, and functional strategic plans. Okay, so even within the strategic plan, there are other aspects, okay, of the plan that should be considered for the achievement of the organizational objectives. So carried out at the top, as I told you. So according to Anthony's hierarchy, we have 3 levels of management, which we discussed earlier. So the levels of planning can be put into a pyramid with the strategic level starting at the top. Then comes to the tactical level, Then finally, the operational level. Okay, so when it comes to tactical planning, these are shorter term plans for achieving medium term objectives. So an example of a tactical plan is the annual budget. Now, budgets and other tactical plans can be seen as steps towards the achievement of longer term strategic objectives. Then finally, we come to operational planning. And this is the detailed day-to-day planning of activities, often at the supervisory level or junior management level, for the achievement of short-term goals and targets. Now, for example, a supervisor might divide the workload between several employees in order to complete all the work before the end of the day. So this is more day-to-day, or simply the routine decisions I get in and routine planning that is done. So the levels of planning can also come to the exam. They can ask you. Now, let's look at the aspect of performance, because we realize that all these things link to performance, especially controlling. So performance measurement is an integral part of the system of planning and control. Now, every managed organization needs a system of performance measurement. Now, managers need to understand what they should be trying to achieve. A sense of purpose and direction is provided by plans, strategies, budgets, operational plans, and so on. And for each plan, there should be objectives and targets. Certain targets for achievement. Example, performance targets is an essential part of your planning. Okay, so all the time, there should be a plan which is set. I get it, to achieve objectives. Very important, because when you don't plan, you don't know how you are going to go about things, and you might end up no longer being a going concern. You may lose the business. Now, managers also need to know whether they are successful. The information they need to provide, I get it, they need is mostly provided by comparing their actual results or performance with the performance target, which is control, and the performance target with also a current forecast or what performance will be. Now, target, forecast, and actual performance should be measured in order to compare them. Ideally, measures of performance should be quantified values, that is financial or non-financial measures, because numerical measures of performance are easier to compare than non-quantified or what we call qualitative measures. So qualitative performance measures are very important because they're also called non-financial performance indicators. These things, we are going to look at all of them as we progress. Now, management accounting is an important element in performance measurement systems, and many performance targets are financial in nature, such as achieving targets for return on capital, profit and sales revenue, and targets for keeping expenditure under control. So we've seen management accounting as a branch of accounting that uses both financial and non-financial information to assist management in planning, controlling, and decision-making to achieve organizational objectives. We have looked at the levels of planning, the levels of decision-making. So the types of decisions as well, long-term, short-term, financial, non-financial, strategic, tactical, and operational. So these are the things that you should understand. However, a performance measurement system uses a wide range of targets at the strategic, tactical, and operational level. Many of these are non-financial targets, and not all targets can actually be quantified. So clearly, a comprehensive management accounting system should therefore provide information for certain targets and measuring actual performance at all levels. It should also provide non-financial information as well as financial information. So if a management accounting system cannot provide all this information to management, managers will have to rely on other information systems in addition to the management accounting system. An entity might then have several different information systems, which is probably inefficient and less effective than a fully coordinated management information system. Is it well understood? So when it comes to management accounting, that is planning, controlling, and decision making, is to achieve organizational objectives. And achieving organizational objectives, we need to measure performance. Okay, so we use various targets from the strategic, tactical, and operational level, and we know that this may be quantifiable information and non-quantifiable information. Okay, these things are very important so that in the management accounting system, when these things are reviewed and provided, we can use them to take decisions to help us achieve the organizational objectives in the long run. So a suitable system will help us achieve this because it will coordinate activities between the various departments in the organizations or the various levels of management to ensure that the organizational objectives are well achieved. So that is management accounting in a jiffy.